Good morning. It is Wednesday. It's hump day, June 26th. And I heard a great joke last night with Jimmy Glick. Jimmy Glick, who is Martin Short, dressed up and characterized and interviewing Bill Hurd. Bill, I forget his last name. But he interviewed him on Jimmy Kimmel. And the funniest thing, he said, isn't it funny, whoever invented the word lisp put an S in the word? Kind of ironic, kind of funny. I thought it was hilarious. Go and watch the interview on Jimmy Kimmel. He's guest hosting. But where are we? Again, yesterday you had green candles. Kind of looked like you faked out. Remember we talked about this one back in May, towards the end of May, the last week in May, where you saw that dip and then you took off again? I don't know if that's where we're at. We're down about 0.1% in QQQ. We're at 478. We've talked about 450, 460, 470 now being the support levels. We're at 478. Again, on the Qs, you're just looking at that. If we go over to SPY, it's kind of the same thing. You're being held up. Even though NVIDIA is driving a large portion of the market, the overall market isn't doing bad. There's other things that are holding it up. So, the same levels remain in SPY. So we're not going anywhere. It's just kind of, tracing towards just to the right. You're seeing a little bit down, but the algorithm's not getting you out. The algorithm still has you in SPY at 532. The algorithm on QQQ is even better. It's got you in since the late April at 426? The 4-hour algorithm is just a solid tool that you can use to take emotions out of your trade and look at these things. Because if you panicked and got out, you missed yesterday's 1% rally in the Qs. You missed NVIDIA's 7% rally, up from 119 up to 126. Another rally that's currently going on, Chipotle. Chipotle just completed its 50-for-1 stock split. It's at 65. If you want to read this article, you can absolutely read it. This is an article about how Chipotle believes that their stock will continue to go up. It is incredibly expensive. Am I investing in Chipotle? No. I think their rice is crap. I hate a $15 burrito. I'm just not a big fan. I think their valuation is nuts. I don't buy it. But have I regretted not buying? Absolutely. The reason is, look at that. Over 1 year, you're up 61%. Year to date, 43%. 5 years, 347%. 10 years, 443%. So while I think that the rice is crap, other people love it. And that's the deal is, you're not always right in this situation, but a 50-for-1 stock split, historically, it's good for like a week. And then you're going to see some type of pullback based on that valuation. Now, I wanted to point this out. This is the Qs versus the software ETF, IGV, versus the semiconductor index. And it's year to date. This is how I know stock picking matters. This chart right here. Because you've got the Qs, 17%. That's fantastic. But if you chose software like Snowflake, we can go over to IGV. Let's go to Seeking Alpha, and we will go and look at the holdings of IGV, because that's where you want to look. We talked about it yesterday, and yesterday's newsletter was about using the tools and finding the holdings of these things. This is the iShares expanded tech sector. So what are the holdings? We can go over there. Adobe, down for the year. Salesforce, down for the year. Microsoft, up for the year. Great. Oracle, up for the year. Fantastic. Intuit, down for the year. ServiceNow, down for the year. Palo Alto Networks, it's up for the year. Great. Synopsys, CrowdStrike, Cadence. You can go down this list of 120 names. But when you look at this chart, software has been the loser. And it's up 4% this year, but you're missing out. Versus semiconductors, SMH, up 49%. So if we go over here and we look at SMH, what are these top 10 holdings? It's NVIDIA, it's Taiwan Semi, it's Broadcom, it's AMD, it's ASML, it's Micron, it's Texas Instruments, Applied Materials. Intel is the only thing that's lagging a little bit, and that's 4% of the freaking index. So stock picking matters. It is 100% a stock picker's market. It's interesting. Now, We talked about VRT yesterday, and I got a question in the social request about VRT. VRT in the algorithm is a buy at $91. Now, do you want to buy this one? I bought it 93, I believe, 93 and change. Immediately was greeted with a nice 4 or 5% pop, and it pulled right back. Am I upset? No, I bought it 90. That last one. Did I get out with this 5% loss? No. I'm looking to add more. This support level that I'm talking about right here, it is supporting. Even though you're seeing it break down through, the candles are still touching this for the most part. So I believe that $90.15 is support. I'll add more. You know why? The MACD's low. The MACD's super low. You go down here on the RSI, it's in no man's land. It's at 50. And if we go over here to Seeking Alpha and we look, VRT is still a strong buy in the quant. I'm sorry, it's a hold. When did it go to a hold? It's a strong buy on Wall Street. When did it go to hold on the quant? Let's see. It's always been a hold. Interesting. This is Vertiv Holdings. It's a cooling for data centers. I hold this. I hold the SMCI, which is doing cooling at the racks. We talked about it yesterday. I like both of these. I don't know why it's a hold in the quant. By the way, somebody asked me, why is AMD more than NVIDIA in a quant or something like that? I don't know the calculation for the quant. Let's be perfectly clear. There is no public information about what the quant rates. And when you look at the quant, if you want to look, the quant ratings beat the market. Here's how the quant ratings work. Seeking Alpha's strong buy quant ratings are the result of powerful computer processing and our special quantum mental analysis. For nearly all U.S. sectors, our quant algorithms pick stocks with the strongest thing. If you want access to the quant, it is in Seeking Alpha Premium, 20% off your membership. You go over to Linktree. Right here, and it's the second link right there. And this quant gets you everything that you need to know about a stock. It categorizes it in 5 different sectors: valuation, growth, profitability, momentum, and revisions. It basically goes over the entire stock, and then it puts them into a rating. And you can go over here and you can look at stock screeners, and you can basically look at it from the quant. You can go to the top quant dividend stocks. You can go. They have a ton of scans here. You can go to the top rated stocks. This is just based on the quant. BLBD, top rated. Oscar Health, we went over this one. This one just took a dump, but it's top rated. It's at $17 right now. New Lake Partners. You can look at these based on the quant ratings. You can break them down by thing. This, again, is a powerful screening tool. And I talked about it yesterday about free screeners and FinViz. This is a screening tool. You can screen by stock. You can screen by ETF. You can screen by comparisons. You can do a ton in Seeking Alpha. And this should be one of the tools that you have in your toolbox, is being able to compare things based on different things. Down here on my homepage, I have energy stocks, latest quant buys, MPLX. I have that one. Energy Transfer, we talked about that one before. Huge dividend. Material stock, we've got a Southern Company. If you're interested in materials, some people love materials, and materials are supposed to be taken out. I know nothing about it. I'm looking at the quant and saying, you know what, rate these stocks for me. Industrial stocks, Clean Harbors, RTX Corporation, Honeywell, L3 Harris, Parker Hannifin. All of these are rated in the quant. Then you go down to real estate, Realty. It's the top one in the quant. Does this guarantee you a growth or guarantee you a gain? No. But what they're doing is they're actually ranking these things. Now, Carnival Cruise Lines, interesting one. It's a top new quant in the discretionary. I would argue RCL is better. RCL is 4.91. But CCL is a newer discretionary quant fund. It's based on the latest ones. RCL was a better one. You can look at consumer staples. It's KO. And you can go down the line. Again, this is what Seeking Alpha gives you. It is a great, great tool. So yeah, when I get this kind of rating in VRT, I go over here and I look at VRT. And I'll see the ratings based on those five things. It's basically the valuation is an F, and we can go over here and look at the valuation. The P is just too high. It's 145%. But I would argue the PEG is more important. This is the growth. So let's go over to the growth. The PEG is actually 61% below the sector. So if we go to the growth, they're growing 15% revenue, whereas the sector's growing 4%. That's great. We can look at the profitability. They're making their gross profit margin 35% versus the sector at 30%. We can look at the momentum. The momentum is an A because this one has been flying. Momentum is a strong force in the market. Revisions, A. 9 up, 0 down on earnings per share in the last 90 days. 12 up, 0 down on earnings per share on revenue. So when you look at this, that's how you use this. Now we can look at one yesterday, and I'm going to go into a 5-minute chart because we want to look at this one. This is RGS. This is Regis Corporation. This is a short. I believe it's a REIT. It went crazy yesterday. Now, could you trade this on a 5-minute candle? Absolutely. Because there were several times where you could have seen, and we're going to open up after hours even. We're going to add non-regular trading hours. So we can see here, if you were up and you were looking at, hey, I want to find big winners that have up in pre-market. This one was highlighted, and you have confirmation. Here you have confirmation. You don't know what confirmation is. Go over to my Daily Stock Pick newsletter, and you can read this education center. It goes over confirmation about how you have it. Long story short, it's over this 9-day EMA, and you had it here at what, 641. 641. You lost confirmation here at 16. Learn how to trade confirmation. It's very, very simple. And this is a 5-minute chart. So over this time period, which is what? From 6:50 in the morning all the way up, you lost confirmation here at 8 o'clock. But 8 o'clock candles are funky anyway on the 5-minute. So take them with a grain of salt. You wanted to hold on to it. It had come. Doesn't mean you couldn't buy back in. Again, the MACD is super high. Seems scary. But if you got in at $6 and you're questioning whether you should sell it at 12, that's a good question to have. We can take a look. One that popped yesterday, if we get out of this one and we look. Oh, by the way, RIVN popped yesterday. We're going to go look at this. There was a RIVN call buyer who basically looked at $25,000. They bought it at 10:34 yesterday, 10:34 a.m. yesterday. Mind-blowing. That $25,000 today is worth $2.5 million. Rumor has it, there's your trader. Rumor has it, that's your trader. I'm joking, of course. I'm joking. But RIVN is one that popped yesterday. Why? RIVN made a deal with Volkswagen. Huge thing. And I said this before. I think RIVN's a $30 stock. It is one that I think in a good hype market, it's a $30 stock. It's trading 11. Would I buy it here? We can take a look at it. We'll take a look at it in the 4-hour. I think it's incredibly overvalued. But here's an article that says, watch for more auto shockers after RIVN landed Volkswagen as a major partner. They go over several opinions about things that may go on. If you want to read that, just get it in the newsletter. It's free. I'll link the article right there. But RIVN, as far as the quant goes, here's the quant, and it's a hold. I mean, again, the valuation, B-, not hard. It's the profitability that's killing it. They are losing 40% of what it costs them to make that vehicle on every vehicle. And that's the problem when you look at this and you go to the financials and you look at, we can look at valuation. The PE is crazy. They're not making money. They don't even project that they're going to make money. And you go and you look at growth, and they're growing at 123%. So that's what you're betting on. Do you want to take a $25,000 and put it on options for this one? No, I don't know when it's going to get to 30. We can go over, we can look at RIVN. RGS was a clear winner here, and you could have traded it. Again, learn how to trade your what you want to trade it, because there's not a lot to learn as far as trading. I mean, use candlesticks. If you're actually trading and you're doing day trading, you're not doing it on the fundamentals. You are 100% just doing it on the candles. So learn the candles and learn those things. There's not a lot to learn. But here, RIVN, we can see clear gap from the earnings before. And the earnings this time were good. They were good. So you continued the leg up. If you had the 4-hour algorithm, and I will tell you, I didn't take this trade, but if you had the 4-hour algorithm and you were looking at RIVN, then at the 4:30 candle yesterday, at 1:30 in the afternoon, you got an alert, buy RIVN at 1182. Did it know something? No. The algorithm just said, hey, the technicals in this name are saying buy it at 1182. You could have bought it at 1182. You know what you're trading at right now? You're trading at 1628. You know where this gap goes to? 1530. You filled this gap, but you got gaps all the way over here. You got this other gap, 1776. In pre-market, it filled this. We can go and we look at the 5-minute. Now, again, we talked about confirmation. You're going to be able to see this because at non-regular trading hours right here. In the 5-minute, you had confirmation at $14. When the news was announced, this one candle is at 20%. Say you got in at the high, it's at $15. You're still happy at 1532, but I would argue that you should have gotten out here at 18. Absolutely should have gotten out here at 18 yesterday afternoon. Any reaction in the market is an overreaction. It came back down. You're back down to normal levels. Now in the 4-hour, it's going to create a gap, and you're going to see when it opens up today at $15, $16, you're going to create a gap unless this, the candle, like the market says, hey, I'm going to pull back. And if it pulls back, I don't see it pulling back. You know why? Because what's the market talk? What they're saying about the RIVN blockbuster deal? They are talking good about this one. And RIVN's not going anywhere. It's not a Fisker. It's not a Fisker. Let's talk about one that's not going anywhere. It's Walmart. Yesterday, the CFO sent the stock tumbling, was down 2%. Walmart CFO warns that Q2 sales won't match Q1. What he actually said was that, hey, that quarter last time was just a legendary quarter. It's not going to be that great of a quarter going forward. Look at the gaps up. Now, you're seeing this one turn off. It got you in here at 63. Do you want to sell at 63? I would argue no. I would argue as you come back towards this gap and you get towards 63, you start adding to it. You start absolutely adding to it. You can look at that MACD. It's going down. It had to come back. From a technical standpoint, this had to come back. So take this news, take an opportunity, put it on your watch list. You can set an alert. You can say, you know what? When we talked about having stocks that pull back 5% on a list. So when they do pull back 5% from their highs, you absolutely 100% buy them. I would argue Walmart is one that you want to do that in. Now, I would also argue that Costco probably has a better quote-unquote pop factor because Costco, while it's trading more expensive than Walmart, Costco is seeing a bit of a pullback. I do think that you have a membership raise at some point in time. And with the cost of Costco, if you have a membership raise, it's immediately a $900 stock. So at $855, am I buying it? I'm not. But at $855, am I holding it? Yes. I bought here at $721. I've got just a legendary run going on in what? A month or two? This was down here at April 24th. In fact, I even bought back here, I think, at 713. Did I get out? No. I don't listen to the algorithm all that much on good quality names. The core portfolio is one. You get all of my lists, by the way. You get all of my scanners. I'm working on more scanners for everybody. But you get everything that I have, the tools that I have when you sign up for Trendspider. And Trendspider right now, $53 a month. How do you get it? You go over to the link tree, linktr.ee. /daily stock pick. It's the top link, Trendspider trading software. Get everything that I have. I give you the 4-hour. As we go through this, you'll see it for $53 a month. It's not just the upside, it's the downside as well, because the algorithm will tell you when to get out. Sometimes I listen, sometimes I don't. You have to make up your own decision, but it will help you take emotions out of your decisions. Now, Google just trumped Apple. They just said, hey, our Pixel event, we're going to reveal on August 13th. They're not only going to release that, they're going to announce that the Pixel is going to be available, but they're going to load it up with AI. Google is a buy here. It's an absolute buy. Google is leading as far as the AI revolution goes. Google will lead that. Now, it's going to be crazy whether they monetize it or not. I think it's going to be a good thing, but it's going to be hard. We talked about 171 being the support. If you buy here at 184, 5 years out, you're not upset. You're not upset. You might be upset if we have a pullback here in July, if we get some type of craziness, but you're not upset. You know why? Think about it. You may not have a Pixel, but you probably have Gmail. They're rolling out their AI into Gmail. Now, you guys know I have Apple as my main focus in my portfolio. It's my savings account. Do I think that Apple is going to have a big iPhone upgrade cycle? We'll go over that because that's the next one. Yes, I do. But I will tell you, I don't know what Apple's intending to do with AI on the phone that I can't do today. And that's going to be the difference. If Apple integrates something into their operating system, because right now what they've talked about is just OpenAI being an extension. So you ask Siri what you want, and it goes out and it will give you the option of going out to ChatGPT. And that's the only thing they've talked about. Now, it's available for them to partner with Meta, partner with Google, and have that go out there and do that. But I can just go into the Google app today and use Gemini. I can go into the OpenAI platform and ChatGPT app, and I can use it today. Do I need to upgrade my phone to actually do that? I don't know. I mean, the integration is going to be interesting. Again, I have all of this AI stuff in my account. So do I think that Apple is going to kill it? I do, because I don't think that a lot of people are as advanced as I am on knowing this stuff. So I think they're going to basically open up the door to a lot of people using additional AI. That's why I think it's good. But I own both Google and Apple as main stocks in my portfolio. This is Apple. Apple ticks up as Evercore bumps up iPhone revenue estimate on back of AI. Again, I think Apple's a buy. Do I think that you should buy it at $210? We talked about the potential of $200 being the support level. And this was way back here at 169. I was pounding the table. You should buy this one. You should buy this. Even with this gap up, I said you should buy this on the earnings. You should buy this on the earnings. You should buy this. But yeah, the Bollinger Bands are cinching up, which means we might go for a little run, but you're on the downside of the 9 days. So am I buying it here? Probably not. I'd probably wait for it to tell me which direction it's going, because the actual valuation of Apple is a little bit difficult to justify unless we see some growth. And that's where the problem is. The growth is the D. And that's where I think the growth has a problem. Is we look at the growth. Their revenue year over year, it's down. It's down. And they're expected to grow. If they don't grow revenue, the stock will be back at 200. So if you're trading Apple, I'd wait. If you're just buying Apple to try and get a position, don't wait. At $210, just buy it. You know, what are you buying? 2 shares, 5 shares, 10 shares? If you're buying 10 shares, 10 times 10 is 100. That's $100 difference. But you're spending $2,000. So $100, it feels like a lot, but 5 years from now, it won't feel like a lot. So that's my guide on Apple. And it got a bounce. You know what else got a bounce yesterday? NVDA. They rebounded after $400 billion sell-off, regains. In pre-market, it's back down 1.15%. Let's take a look at, there were several ratings upgrades. This particular one upgraded the price target from 126 to 150. Citi bumped it up to 150. Do I think you should buy it? I think at this point, you just buy it. But I think it's likely to go back to, it's just as likely to go back to 100 as it is to go to 150. You're trading right in the middle. You're trading at 124. It's just as likely to go back to 100 as it is to go to 150. The problem is that you've got this earnings coming up here in late August, and they probably will blow things away. Right now, it is priced to perfection. The second they miss, or the second they say, we have a delay, that's where you get the problem. Now, Blackwell, the next chip stuff, is fine. And then you've got a chip after that they've already announced. You got their investor day today. So I think there's enough news in this to assume that you should just buy it and just hold it. Just hold it. I mean, that's essentially my guide. $400 billion and then an upgrade. It's probably pretty good. I am going to put this in the newsletter, so sign up for the newsletter. But we did get a warning on Cleveland Cliffs, and if we go and look at this, is part of the core portfolio. Cleveland Cliffs has been rated a sell, and I got this warning again. Seeking Alpha, fantastic service. They emailed me and say, hey, one of your stocks is considered performing badly. If I own Cleveland Cliffs, I'd be worried. I don't own it. I trade this one. Has characteristics, it's the full year up revisions. None up, sector down. I mean, it's the revisions that are killing it. If you look at this one, the revisions are a D-. 0 up, 6 down. 2 up on revenue, 6 down. If we go to the ratings on Wall Street and we look, it's at Wall Street says hold. Price target $18, 27% upside. But I would argue on the chart, we talked about this one before. When you get down this low, you've got to make sure that you have some support levels. The support level here is $13. I would not buy at this $14.78. We don't have confirmation. We talked about confirmation on the 5-minute chart. This is a 4-hour chart. We don't have confirmation on the 4-hour chart. We don't. And I've identified this range right here between 13 and 22 as being the range. But when we go to the weekly and we look at that, we look at where it was trading pre-pandemic, and it was trading at $8. So I think it's a better company. It's more well-run. It's significantly good. And you can see this trading range in here. This goes all the way back to 2022. So you've got a trading range. As you bounce off this, you probably have the ability to bounce up to 22. But I'd rather see you buy this. Like, say you were trading this in October 2023, and you said, you know what? Its low is 14.13. I want to buy it at 14.50. You may have, say $15 because you see that there's confirmation. Well, you might have to live with it going down to $14. And then you see it go up. I'd rather see you buy at 16 or 17 and have it run to 22 than to see you buy at 14 and have it go back to 8. So make sure you're waiting for this. But the other thing that I will put in the newsletter is there are ETFs by quant rating. And the highest quant rating for an ETF right now is a leveraged ETF on NVIDIA. And it's not the short, it's NVDA. This is the highest quant rating for and you can see here, if you traded the 4-hour algorithm, this is the 4-hour algorithm, and you decided, you know what, here in April 26th, the algorithm on a triple levered ETF leveraged ETF told me to get in at 34.48. It's pretty good. Keep running. You have confirmation. No problem. It pulled back here. Algorithm didn't get you out. It doesn't take emotion into that. It said, you know what? You want to hold it. Here you go. And then up here, at 84, it didn't tell you to sell it. It said, wait until the confirmation is gone. Confirmation's gone 105%. 105%. Now, if you just use this, again, that's 105% in 60 days. That would have paid for your Trendspider all along. That would have paid for the Trendspider all along. Again, the 4-hour algorithm, super, super strong. I'm going to put these 4 ETFs in the newsletter, so look at it. Now, I got a message from a couple of people yesterday. This is Arista Networks. I brought this one up. This is in our watch list. I've said it before. I said this was the trading range that we saw. This one was up. It's basically putting in a nice little thing. ANET right here is a good watch. I wouldn't say it's a buy. I would say it's a good watch. When it was a buy, it was a buy at 302. You're at 334 right now. You're up 10% on this one. Your average win is 10%. I would wait and look. We identified this as the range right here. If we look at the weekly, it's even a bigger range. This goes all the way back to January of this year. We've broken out above that. We use the top line as support. We use 300 as the support. It used to be resistance. It turned into support. But I would argue that you don't want to rush into this with the MACD going down and the RSI in no man's land at 61. I would look at that one, but I would have it on a watch list. Another one I would have on the watch list is APP. This is AAPL. We identified a range back here, and it since has broken out above that range. Now, this one, MACD is lower than the oscillator. The RSI is down at 56. We had a buy a couple of days ago at $80. You're at $81.23. Bollinger Bands are cinching up. You're trading a little sideways. You've covered this earnings gap that where it was going up. You've covered it already. So where are we going? I would argue we're going up. Tesla. This is one. Tesla attracts a new buy at Stifel, points to multi-year growth potential. They upped their price target to $265. That is the catalyst that probably Tesla needs to go up. It's down today, but it's $186. It's moving towards that $200 price point. I would argue that the end of the month, if Tesla doesn't meet their deliveries, I would argue that this one's back down to $160. So be careful with this one. The algorithm got you in at 183. You're at 187 right now. I don't know that I have the cojones to hold this one all the way through the delivery number. But if you do, have at it. Have at it. I just think it's an interesting one. My parents do own a bunch of this stock. I have not gotten them out. I talked to them. They gave me the approval to get out at 160. I am simply looking at this one, waiting for some weakness. Right now, I don't see any weakness. Whirlpool. This is an interesting one. I'm sorry. I need to get out of that one. Whirlpool, WHR. This is an interesting one. They jumped as a Bosch waste takeover bid. WHR, it's up 18%. WHR. Was this one, the short interest in this one huge? We talk about these kinds of things all the time. Now, I always say, hey, bottom left, upper left to bottom right, this is not a stock you want to be in. But as you get a takeover, this one might be an interesting one. I don't know what the price target is for the takeover. This one, they don't outline it. Alert on June 12th, which cited people following the matter. Whirlpool short interest is 13.37 of its float. The company has it's a sell in the quant. This one is one that you would be trading. I would argue today at 103, that is right up here. Let's put a line at 103. Because you are looking at, that's where it's trading, 103. We're going to push that up. 103 is where it's trading. I would argue that they are looking at that as the resistance level because it provided some support for this weekly bump. I would argue that the board is probably looking at 122 or 125. So if the news comes out, it's probably gonna pop on that one. Now let's talk about some earnings. FedEx yesterday, I was wrong. Here's my humble pie. I'm going to do the Jim Cramer. The hubris. Douche. FedEx, it's up 12%. It was up as much as 15% in the pre-market. FedEx is a hold in the quant. They love the story. I mean, again, it's cost cutting. They announced, killed it, said their guidance was on target, which is better than expected. They were expected to bring the target down. This may be a catalyst for this one to go back up. I'm not into air freight and logistics and shipping companies, but FDX, the chart, if we look at this one, let's see how the 4-hour algorithm performs on this one because it's been in a trading range. 4-hour algorithm doesn't perform real well. It got you in at 250 underneath the 200-day. I would argue probably not a bad bet to buy it under the 200-day, but that's, again, me talking in hindsight because I know now that everything was fine. This gap may fill support for FedEx. We filled it on the previous earnings, and then you've just seen it slide down. The last earnings were good. I would be looking at this one. Right now it's trading at 288, which is, let's put a line at 288 because you want to see exactly where it's trading. I would not trade this one because right now you're looking at this one using this as its resistance level. I would argue that 288, let's put this one in. Let's put 288 in because you have a nice double top right there at 288. 289. See the one? One top, two top. Your top up here, if you were to go, the top is, high is 318. 318. So that would be where you would want to go, this trading range, if you hold 290 as your support. You got time. If you want to hold this, and look at this one as, hey, it's going to, pop up back up there, I think you're fine. I do believe that you're probably looking at a significant resistance level at that 288. So as we go along the day, you can trade this one. You can look at this one. It's just going to look a little bit different. Now, one that is coming up today is Micron. And we can talk about this one. This was an interesting post. This is a look at DRAM. And I thought this was interesting. It was brought to my attention by somebody I follow on Twitter. I don't remember who, but it was a great look at how DRAM and Micron is going to grow. And so they're saying Micron is looking for a pop. Now, the other thing that was noticeable in this whole thing was that Micron has had huge insider sales. Micron is up 1.6%. You're at 143. You can see this candle all the way up here. The all-time high got you to 157. If we go over to FinViz, the insider transactions in FinViz is one I want to point out. The average Wall Street price target is 160, by the way. You're trading at 143, so you do have some upside. But look at this. This is, and these are not small values. I mean, the CEO just sold what, $7 million, $8 million. And there it is, another 5 million. The SVP sold 1.8 million. This is a bunch of executives selling stock. Now, I will tell you, as an executive who had stock to sell and had RSUs, you want to sell this on the pops. And the reason you sell it on the pops is you don't sell out, but you exercise your options and you sell during these times. The reason you sell at these times is because blackout periods are so long. So for instance, they can't trade it. They just traded on June 18th. They can't trade it, but after like within a week of the earnings. So even if it pops today on the earnings, they can't trade it. They can't, sell their options on the pop. You got to wait like a week or so. There are certain restrictions that you have. So I don't want to take that one as, oh my God, they're bailing on the stock. The reason they're not bailing on the stock. Look at how Wall Street has analyzed this one. If we go over here and we look at Micron and we just look at the Wall Street analyst. Oh, I want MU, not UM. Excuse me. And we look at Micron, okay? The quant has it as a hold. Wall Street has it as a strong buy. Well, let's go over and look. 38 analysts. That's significant. 25 have it as a strong buy. If we look at this, there's still a 7% upside. But look at how it's chasing that price target, and the analysts are chasing that price target. So let's go and look at revisions. It's a B. 21 up, 2 down. 25 up on revenues, 2 down. So you want to take all of this into, and we look at the actual earnings. Look, they reported 42 cents last time. They're expected to report 48. That's up. They reported 5.82 billion. They're expected to record 6.23 billion. That's up. When we take a look at this chart, all of this should be priced into this, because when you take a look at this weekly, it has just gone parabolic. Absolutely parabolic. This is the AI trade in here. This is understanding that DRAM. We shot through this old resistance at 98. I don't think you're coming back down there, but I don't think it's crazy to think that this comes back down to the 120s with any kind of shake on the guidance. And so that's what you want to worry about. So again, earnings, I'm not trading anything. We have Nike tomorrow. FedEx killed me. I thought it was going to be bad. They killed it. We have Nike. We have McKesson tomorrow morning. It is what it is. Go and trade it at, trade RIVN on the 5-minute, whatever you want. Now, Ross from Warrior Trading, he goes over candlesticks in this one. This is extremely important to help active day traders find stocks with the highest upside potential. Ross breaks down the ABCD candlestick pattern. This is great. I mean, this is like, and I think it's like 40 minutes or something. It is a fantastic, fantastic education video. I will include it in the newsletter. In the newsletter, I'll include it. Okay, let's go to our social request. W Cred. Hey, Gary, great podcast. On your Trendspider charts, I see an indicator that runs out into the future past the last candle. Can you tell me what that indicator is? I was going to ask Trendspider when I got this question. I know what it is. I don't know how to turn it off. I'm not a huge fan of it, but I do know they've explained it to me. So it takes into account options. It's the price behavior explorer. I don't know how to turn it off. I think it comes when you're in the strategy tester, and it's based on your strategy. And so this is the expectation. I don't use it. Let me be clear. I don't use it. It is not something that I actively look at. I look at the MACD. I look at the RSI. I look at the Bollinger Bands. I look at the moving averages. I look at those things. I look at the volume shelves. I look at the actual data. Anything that's anticipated, I try not to cloud my judgment with. But that's what this is. And you can see based on the previous, I think it's based on this one, but it's the anchored VWAP, or it's the expected price behavior. I forget which one it is. I need to ask Trendspider. But part of the great thing about Trendspider is you could send them a screenshot, and you can go to my my newsletter, and you can say, you know what? Gary posted this thing in XLU yesterday, and it's got this great trend up here in XLU. What is that? And so you take a screenshot of that, and you hit the contact us button down here in the bottom right on Trendspider. And the bottom right, contact us. That is why I partner with them. They are fantastic as far as customer service. It is beyond belief the customer service that they have provided me over the years as a paying customer and as an affiliate. I don't get special treatment as an affiliate. I can tell you that. But again, WCred, I would ask them what that is and how to do it. I think, let me see, Price Behavior Explorer. Let's just do Price Behavior Explorer Trendspider. You could probably Google. There it is. Price software updates. This is from November 2022. It's in the strategy adjuster. I do know that. And you can look at 25th, 75th winners, losers, whatever it is. But yeah, I'll include this. You know what? I'll include this in the newsletter for you, WCred, so you can look at it. You can see what that is. But yeah, that's what that is. I don't use it per se. I probably should based on some of the patterns that I've seen. But it's just, it doesn't enter into my mind. I barely know that it's there. I'm not getting rid of it. I just like it. I mean, you know, this makes me feel good. Hello, Gary. Cyber. Love your podcast. Watching from Canada. Are you reading me or is this automated? Every email that you guys send me, I respond to. Every text that anybody sends me, I respond to. Everything, I try and get back to you guys. If you message me, and I've had a few people, you know, quite a bit, 10, 15, message me on Substack. And if it identifies you as a paid customer, you're getting a response within probably 20 minutes. I think I've even responded 5 minutes, 10 minutes, whatever. But you're getting if you're a paid member of the newsletter, you're getting a response pretty damn quickly. And I've shocked people with how quick I am. Love your podcast. Watching from Canada. If so, I have a real gem for you to evaluate. NNE. I think this is nuclear, if I'm not mistaken. This is NNE is nano nuclear. We can take a look at it. It's new. I mean, I can tell you right now, it's new. I mean, it's fine, but I don't know. It's probably not covered in the quant. This does seem to me like one that you would trade and not necessarily. I mean, it's down 7%. I mean, the Wall Street says it's a strong buy, but it's one analyst. So, I mean, the summary of it, $831 million in market cap. It's not big. You know, it's not big. So you can look at it in FinViz here, NNE. I mean, I don't know what would get you into this one. Nuclear's fine. I mean, nuclear's a great take. It's not making money. $831 million. They don't have an income. So, Cyber, thank you for the kind words. Trade this one. Just trade it. I mean, again, if we go to a 5-minute chart on this one, you can absolutely trade this one. Look for confirmation and trade it. I don't think this is one that you put in. I'm not taking my millions of dollars that I have in Apple and saying, you know what? I should put it into nano nuclear. No, this is a trade. There's a difference between that. So I don't think it's a bad one. It provides you great volatility to trade. Your MACD super low. I mean, this morning candle alone is a 10% period. That's not one that I want to sit in. Even NVIDIA scares me with some of the candles that you see in NVIDIA on a 5-minute. You know, even this 4-hour candles. I mean, some of these scare me. The 4-hour candles should not be more than 1%. This is a 6% candle in NVIDIA. So if you want to trade that one, fantastic. Trenton from Spotify, FSLR. This is First Solar. And this is the reason this one's getting a big bump is because solar is part of the integration into energy for AI. And so it got this huge run up. And yes, the algorithm had you in, you got out at 75. What I'm seeing right now is weakness. And it's not like it's not going to go up. This is a great solar stock, but I'm seeing weakness. If you look at this weekly, it's bound to come back down here to 233. You're trading at 253. Getting back to all-time highs will be tough, but plenty of room if this is the bottom and rates start being cut and solar comes back. That was written in December of 2023. In December of 2023, I wrote that. Now, were you upset if you bought this at the high there at 169? You were upset because over here you get down to 140. So you were probably a little bit upset. Are you upset today that you bought at 169? No. I would argue as you got up here at 274, at 306, at 300, probably should have sold. Again, at 253, I'm not seeing any strength in this one. If we go over and we look at this one, it's going to be expensive because most of these ones that run are. And the valuation, it's a C. It's a C. The profitability, on the other hand, is a D. Now, it's a strong buy in the quant. The gross profit margin is 43%. The sector is at 49%. Now you look at the valuation, it's a C+. The PE, a little bit crazy. Sector's at 23, though. I mean, I would argue that solar this is a semiconductor one. This is part of semiconductors. That's why. But look at the PEG. The PEG is fantastic. It's 67% below. So do I think this one could go higher? I do. Now, Wall Street says it's a buy. Their price target is 281. That's an 11% upside. But when you take a look at this chart and you look at it in the 4-hour, I would argue that because it's flown this high, you want to look for strength in the 4-hour or in the daily. Right now, you just don't have it. Your MACD is below the oscillator, not moving up, still moving down, strike line moving down, the RSI moving down. It's at 40. So I would argue, Trenton, it's probably one that you want to have in, but also look at the run that you had in this one. Just May 22nd, look at the volume. And the volume drove this one crazy. So as you get volume peaks, you start to see this one pump up. But I would argue that you want to hold off on buying this one. I think it's been a little bit of a pump. Cole from, Warama. Cole Warama from Spotify. NXT. Let's look at NXT. NXT here. Next tracker. I don't like those huge bumps, and you're looking at weakness right now. Algorithm got you out with a 14% gain. Algorithm makes you 61% versus 64% if you buy and hold for 16 months. So it's a newer stock. It's only 16 months. Your average win is 14%. Again, those big ones up and down kind of worry me. We can go look at the valuation, but because it's new, I don't like to trade a lot of IPOs, but this IPO came out at 30 and you're at 49. You went all the way up to 60, maybe 65, somewhere in that neighborhood. But let's see what Seeking Alpha thinks about this one. NXT, let's see, Wall Street, $61 price target, 24%. If you look at it, I mean, this one they chase the price target up. It's a buy in the quant. Valuation is a B. The problem that you're going to have is the revisions and the momentum. The momentum on this one right now isn't good, but the valuation, I mean, it's a PE of 16, sector has 18. It's in the industrials, electrical components. The PEG, hugely great. Profitability, they have a 27% profit margin. Sector median is 30. The momentum's where you're getting killed. It's down 15% in 3 months. That's where you're getting killed. Long term, it looks good. Revisions, 11 up, 9 down. That's the last 90 days. 8 up on revenue, 12 down. And when you take a look at this stock, and if we were to go and we were looking at the 4-hour, I would argue that you're probably looking at about, I would say this gap, even though it's been filled on the way down, I would say that $45, $46 kind of puts you in a support level right there. But that you're trading on the downside of the Bollinger Bands. I mean, the downside of the Bollinger Band. So I don't know if you're holding this one. I don't know if you're looking for a little bit more, but it's not one that interests me. I should say that. But trading this one, I think you're fine trading it. Again, it's been out for 16 months. I don't know that you can actually set a price target for 16 months of stuff, but this is why I don't like IPOs, because they can trade huge. They're good to trade. They're not good to own. Orlando, it's Ashley. Hey, Gary, what do you think is going on with VKTX? From what I see, the lowest price target is 90. Today it dipped down to 48. Debating whether to buy the dip or get out. This was hype, and this is based on their GLP-1 tests. This has nothing to do with anything other than GLP-1 tests. And so you see the volume popped up here. And the volume popped up because they got approval for the next round of tests. I think they're looking at 2025, 2026. So understand that was tests. Now, if you're looking at it before these tests, you're trading in the $20 to $25 range. And that's where people saw this. If you pull this, the volume level, we're going to pull this back here. I'm going to grab this, and we want to look at where people are holding it, because beforehand, you're seeing that most people are still holding up here. There is an enormous volume shelf. You are in no man's land as far as volume goes right now. So my guess, you're looking at 40. And if you pass 40, you may be looking at 30. And then you're down here at about 25. And so, Ashley, we can take a look at the valuation here. This is kind of why I say you trade, trade biopharma. Now, here's the thing that I will tell you. Your outlook on this one takes into consideration. If this is one that you want to hold for a very long time, I don't think that you're in danger. Again, it's a market cap of $5.27 billion. If they get some type of pill out there, and this brings it up. Besides Danudril, other drug candidates in the mid-stage development are Viking Therapeutics, VK2735. I mean, they're in the mid-stage, so they're looking at 2025, 2026 before they can even look to launch. Now, there's a likelihood that maybe somebody buys them. Maybe Merck buys them. Maybe somebody pays $5.27 billion and just says, you know what, we're just going to buy this. Rather than try and develop our own drug, we're just going to buy it. And so, that's what you have to worry about. Now, the valuation, crazy. It's actually crazy. They're not making money. Their growth, fantastic, working capital. They have tons of money. Their profitability, they're not making money. Their momentum, it's an A+. But that's based on the long-term momentum. Revisions, they're 3 up, 6 down. So in my mind, I would not be looking at this one for a short term. Again, if you're looking at a short term for this one, then I'd get the hell out. If you're looking at a long term, then I would wait until you see some type of support level in this long-term chart. And the support level that I see is probably this resistance at about $26-25. So if you want to get out at 46, I wouldn't blame you, but I wouldn't add here at 46. There is nothing that tells me that absolutely we want to add to this stock. Nothing. They're not making money. This is why I like the IBB versus actually holding biopharma. It's a perfect example. They pumped up. It's a great one to trade. Again, I think it will get back there as long as their trials go along well. If the trials don't go along well, you're going to get screwed on this one. This one has the chance, these biopharmas have the chance to go to zero. If for some reason somebody has a bad outcome on one of these tests, you'll get screwed. Hey, Gary, can you cover Unity Software and Twilio? Unity Software, Unity is you. Unity Software, upper left, bottom right on the weekly. Let's look at it's software. Remember what I said in the beginning. If you chose software, it was the wrong play. This is software. Unity has performance. I'd get the hell out. In my mind, there's no reason to get into this one. Do you want to time the bottom? When would you have timed the bottom in the past? Because right now may not be the bottom. It just may not be the bottom. There is nothing that tells me that this one's a good one. Twilio, I do have some some experience with, the software is fantastic. I've identified a range that it trades in before. This is a alpha pick. I think is it 3 months ago? It's February. So I guess it's 3 months ago. It's an alpha pick. It was up here. We saw the earnings gap down. And then you try and break back up, but it was just trading sideways. Then the next earnings came out and it's even down further. This is one that I would probably get out of. Again, this is software. We identified this range right here, and you're at the bottom of this range. Do you want to get into that one? I mean, Twilio is just one. Again, it's an alpha pick. And if you don't know what alpha picks is a portfolio of 2 data-driven stocks every month on the 1st and the 15th. They alert you when to sell. They haven't sold out of this one. They haven't sold out. So I think Twilio, it's a hold in the quant. And the only reason it's a hold is the momentum. And momentum is a super strong force in the market. Sometimes you can't get out of your way. But again, this is software. Twilio is software. It's an internet services and infrastructure. It's a service. And I love the product. The stock, I don't love it. 52-week range is between 49 and 78. Do you want to get in here? I'd argue that again, the pessimism won't last forever. But they've got to show some type of earnings. And their next earnings are coming up early August. There's nothing that tells me that this is a bad stock. Everything tells me that you've got a range here between 70 and 50. That's where I see that's where I see it going. So hopefully that gives you enough thought. Scans. These are ones that are showing upward trend in the 4-hour algorithm. PanW, Palo Alto Networks. This is one at 300. I said buy. At 320, would I buy it? I don't know. You're looking at pretty good resistance right there, but you have a gap up to 360, 370. I would argue that if you're buying at 320 and you want to get to 360, I would argue that it would get there. But again, you have earnings coming up. This is a bottom left, upper right stock. It's a good one. UNH. This one's a buy in the algorithm at 482. I would argue that you want to get this one closer to 450. But I would also argue that if you want to buy this at 480 and you want to just pump this one up to over 500, that's a play too, because this one constantly trades below 500 and then goes above 500. You're seeing the 50-day move down. The Bollinger Bands are cinching up. You don't have confirmation. I don't know what would get you into this one, but maybe you want to. We talked about RIVN having one. One that I think a lot of people hold and a lot of people want to trade is SoFi. SoFi just had a cross up here in the 4-hour algorithm at $6.42. It is on the lower end of the Bollinger Bands. You don't have confirmation. I would argue this is a $10 stock. I would argue that we're going to cover this gap up to 861 at some point in time. The valuation is what's killing this one. I identified this range based on just 2023 and 2024. We've broken below that range. That's the problem, is that this one has no more love. They have to show the thing, show some earnings. And with all of the student forgiveness programs, they're just not making money. Fiverr. This is one that, you go on Fiverr and you can hire people $22.62. Now, do you want to buy into this one? This one's a little tough because this one is an upper left to bottom right trending stock. But it says it's a buy. And again, it's on one of my personal watch lists. Moderna. I think this one's a $300 stock in good time. I hate these vaccine companies. And let me be straight. I'm Gary. I'm triple vaxxed on Moderna. My pronouns are they, them. I have no idea what that means, but I was told to say it because yesterday I said my pronouns were he, him. Tomorrow my pronouns may be she, her. But again, 137.60. That's a buy. The actual stock is trading at 127. It's a bump down today by 10%. But this one, you may be getting back down to 100. I don't think you buy this at 130. I think you trade this one. But once you have confirmation and you have an upward trend in this one, you can actually trade this one for huge profits. This is not one to buy and hold. This wasn't the core portfolio. I took it out of the core portfolio because you don't want to buy and hold this one. Now we have leverage. One that I think I went over the NVDL. Dash, DoorDash, Take-Two, TTWO, Duke Energy. You talk about utilities. Duke Energy is one that we've talked about Duke Energy before. This one is in a decent trading range, not horrible. It's got no confirmation. It looks weak here, but you've seen this one here at 96. That was a great trade, 5%. You could have gotten out here with 5, 6, 7%. The algorithm makes you 13% over 24 months. You make 2% if you just buy and hold it. So again, this is a utility, so it's paying a pretty good dividend. And we look at the weekly on this one, and it's just in a trading range. And you're going to see probably the top at 106 on this one if you buy it at 99. So again, you have to define where you want to trade, what you want to own, what you want to do, blah, blah, blah. Tesla's up 2%. We're seeing a pretty good market right now. Apple's up 1%. Cleveland Cliffs is up 0.48% in this core portfolio. Roblox, we talked about Roblox. This is going to be a $40 stock at some point in time. Shopify is up 0.26. That one was up. Tesla's nearing that 200, and boy, I'm going to have a problem if it gets to 200 before the July deliveries, because I'm probably going to want to get rid of it, to be honest with you. Yeah. So if you have any questions, again, the things that I'm partnered with are Trendspider, which is $50 a month. Great. Seeking Alpha, you get 20% off and 7-day free trial. And then Alpha Picks. Those are the three. And if you want charting software, say you don't want to get Trendspider, but you should absolutely have desktop charting software. And the one you can get is Webull. I like Webull. You can find all of the stuff about my moving averages and everything that you want here on the Daily Stock Page newsletter. Get a free 7-day trial of it. I don't care if you cancel. The Education Center has everything that you need to know how to trade. So, yeah. Okay. Today's Wednesday. Let's hope that Micron is good, because Micron probably will bounce up NVIDIA and everything else. If it's not good, we're going to see the market turn down. But that's okay, because we talked about QQQ being a big one for July. So get ready. Prepare yourself. I'll talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.